Hello everyone, hope you're doing well. So this is the first video of my new YouTube channel. So the reason I'm setting up this channel is because I've been a value investor for a long time. So I want to talk about some of my experiences with value investing. And in particular with this video or this series of videos, I kind of want to show the research that I do before I invest in any stocks. As this is my first video, if you have any feedback after watching this video, you can leave a comment in the comment section below. Although, before all of that, I want to say that this is only a video which is intended for educational or even entertainment purposes. This is not financial advice. Please don't buy or sell this stock based on my video. Please do your own research. The aim of this video is more showing the research that I do as a value investor. So, I've had my eye on Asbury Group as an investment for the past few years. They've been growing a lot recently. They started out as an auto dealership group in Texas, and they floated on the stock exchange in 2002, and then that helped them to then expand into the rest of America. So the growth that they've had has basically, in my opinion, been around that they are run by experts in the auto industry who have seemed to come up with a highly optimized blueprint that they can use for auto dealerships. This has enabled them to buy up a lot of other even underperforming dealerships in America as they've expanded, and as they add their Asbury blueprint, it's enabled that particular dealership to become a lot more profitable and successful within the Asbury Group. They've also been able to come up with a highly diversified set of income streams. They're not only reliant on car sales, they also do some of the back end things such as the maintenance of those vehicles and even insurance. This is kind of linked with the customer centric approach, meaning that they want to serve the customer really well so they feel happy and so they want to come back again and again. This is shown over the years that this has been a really successful approach because they have grown rather a lot over the past 8 to 10 years. One of the areas that I think a lot of investors might be worried about is the kind of move over to the digital side of it. For me, if they were ignoring it, that would be a big red flag. But the fact is they've already started a business that's called ClickLane, which is like their version of Carvana, and they also have another business which is called dealer.com, which aims to help dealerships have a better online presence and have a flow of inquiries through the website, which will hopefully lead into sales. So for me, when we look at the management, I don't really want to go through this in detail, but you can read all of the details if you would like to. They have a very experienced management team which have been in the auto industry for a long time. They've got a very good track record. So for me, this is the most important thing. This has been, for me, the driving force behind the success of Asbury Group, and for me, this will be why they are successful in the future. And yes, the online things they have like ClickLane are nowhere near the success of Carvana, but I would really put my trust in the management team to find a path that is very successful in the digital age. Whether this is through ClickLane, but if that doesn't work out, I just think they would go out and buy another online dealership and integrate it. Anyway, for me, that's not a big stopping point. I think, like I said, that I trust the management to find a good path in the digital age. They do have a lot of experience in this industry, but I would say it's a personal choice. You should do your own research and see how you feel about it. The CEO and the other senior management, they own a lot of shares, so I wouldn't say it's the most that I've ever seen for a management group, but at least they have some ownership of shares, so that that incentivizes them to increase the value of those shareholdings. So for me, this is a good thing. I think that they would want to see that the value of that increase, and therefore they would do everything they can to increase the performance of this company. One of the things I like to do in my research is I really like to go to Google Trends, because I don't want to invest in a business which is a declining one. So here, this is the auto dealership search term in America over on Google Trends, and as you can see, it certainly is not a declining business. If anything, it has been slowly trending up. And then obviously when we look at the online side of things, that is a growing industry. Yes, like I said earlier, they don't at the moment have a major visible brand there, but I'm really confident that the management team will be able to get there, whether it is with ClickLane or by acquiring another business. And for example, this is the Google Trends for Carvana. So you can see at the moment they are the very well known online brand. So this is the kind of thing that Asbury need to get to eventually. So I actually purchased Asbury a while ago, a few months ago, but I just wanted to highlight kind of like the research that I go through. So I'm now going to show you a platform that I use. I've been kind of struggling for many years to find a platform that has all the important value investing style metrics in one place. I finally found one. I will leave a link in the description so that if you're interested in trying out this platform, then you can. So if we have a look at Asbury Automotive Group on here, one of the major things is that all of the financial underlying metrics here are really good. So this basically shows that over the last 5 to 10 years, they've had a good, very, very consistent track record in all of these areas. The most important area for me is the return on investment. It shows that the money that the company has invested has shown a really good return. Also, the growth of cash for me is very important, because it shows that the business is a growing one, and that they have the money to expand the business or to give back to shareholders, which is good. But it's really good to see that all of these are very high. And when we look at the financials, you can see all the graphs are going in the right direction, which is very good to see. But also for earnings, yes, their last earnings was slightly disappointing, but if you go and look in the past, you can see it's all green. It's very rare that they have a surprise. And when I am investing in these kind of businesses, this is exactly what I want to see, that they have a consistent ability of performing. I feel like that's really important. I'm investing in a company for the long term. So this is very important for me. And well, this is why I wouldn't invest in a company like, for example, Carvana. Yes, they've shown recent success, but they don't have the track record yet over a long enough period of time. I kind of want to invest in a really good business for the long term. Some of you might be saying that they stopped the dividend in 2008 after the subprime mortgage issues. There was a big economic issue there. For me, it doesn't really bother me that they don't have a dividend anymore, because if the management think they can use this money in a better way, invest it back into the business and grow the business faster, I would rather that they did that rather than giving us half a percent a year or whatever it is. I think that they've already shown over the years that they can actually get a much higher return than this by reinvesting back in the business. So yeah, that isn't really something that really bothers me. So I also look at the margin of safety. So this one has a very good margin of safety. I'm sure that any of you that are value investors that follow investors like Graham or Buffett will be aware of this. If you don't know, you just need to Google margin of safety, but it basically shows that you are buying this business at a discount. They will look at the earnings per share and try to project in the future what that could be, and if that happens, what would be the value of the stock price. So you can see this one is really good. When we look at this score out of 100 here, this is basically showing all of these underlying metrics. When you add them all together, that is when you will get this score. So you can see that this one is really high. And then when we look at the competition, I've basically thrown in here a lot of the competition for Asbury. You can see that they are by far the best in terms of the score and the margin of safety. There's a few other ones here, but for me, I would rather invest in the proven track record and the very experienced management. So one thing I will finish up on is that I did buy this company a few months ago, but I'm now thinking of buying again. You can see on TradingView I use something that's called the wavy tunnel. If you don't know what that is, you can just search up on Google, but I use the weekly charts so that I can see that it's in an upward trend, which it is, and then I use the daily chart, and when I see there's a buying opportunity, then I will buy more. So you see here that it's about to cross. When it crosses and settles back on these red lines, I think then I will think of buying more. Anyway, I hope this video helped you and helped you see the research that I do when I am thinking of investing in a company. And if you're a value investor as well, hopefully it will give you some ideas. If you have any ideas for other things I could add into my research, I would love to hear it in the comments. So anyway, thank you for watching. See you in the next one.